So thanks for joining me today, Chris.
Sure. Yeah. Thanks.
So for the viewers, maybe tell them a bit more about yourself.
Yeah, for sure. So
Taking this one.
this one over here.
Yeah.
Yeah. So my name's Christian Stelmach. I run a financial planning business here in Ottawa. I've got a wife, 2 young kids. We live out in the West End, just moving to Carp now. I've been running my practice for the past 7 years. It's a phenomenal business. I love being as helpful as I can to as many people as possible. And sometimes I'm lucky enough to translate some of that into business. So that's the game. And really what I want to do is help clients identify what their long-term goals are and then help them put a plan in place to achieve those long-term goals. So that's what we're all about.
The financial planning?
Yeah, interesting question. And I'm a bit embarrassed to say it was a total fluke.
Yeah.
Total fluke. So we'll rewind about, 9 years. And I was just back from a trip that I had taken with my girlfriend, now wife. We were over in Australia, Thailand, New Zealand. Came back and I was living in a buddy's spare room. So he rented me out the room in his house. His girlfriend at the time had quit her job and she had been doing a lot of job searching. And I was just finishing up. I had taken this little business program at Ottawa U. I realized I wanted to get into business of some kind or sales. I wasn't quite there yet.
Yeah.
I had about 3 months left to go until graduation. That's when I said, I'll start looking for work. She had spent months and months and months trying to get in with the government or some other, she wanted to get a job, something in her field, something she was interested in, and having a hell of a time doing it. And me kind of being a bit arrogant back in the day, I said, what are you talking about? Finding a job's easy. And I flipped open my laptop and I went to Kijiji and I typed in sales jobs Ottawa.
Yeah.
And I fired out my resume to about 100 different sales organizations.
Yeah.
And the thing about sales is that if you're willing to give it a crack, anybody will give you a shot.
True.
Because there's no risk on their part. That's straight commission most of the time, right? So they'll say, hey, come in for an interview. So the next day, I've got like 60 phone calls. So everybody wants to hire. There's sales right on. We got this guy who wants to do sales. Great. So I get this call from this guy, and I'm listening. I'm like, I don't know. It sounds a bit weird. And I walk into this building, and for certain compliance reasons, I'm not going to mention the firm that I'm with. But I walk into the building, and I was like, whoa, this place is real deal. And immediately I realized like I'm underdressed. I don't know if I shaved that morning. I'm like, oh my God. And this guy's grilling me.
Yeah.
And he's telling me about the opportunity and he's saying, you show up to an interview like this? And I was like, oh my God, I'm so sorry.
I didn't know.
I had no idea. I'm just a little punk kid, I'll show my buddy's girlfriend. Yeah. And I sincerely apologized. And I said, I'm so sorry. I had no idea what I was walking into right now. You have to excuse my ignorance. I said, I would love to reschedule this interview and come back in, proper business attire if you'd be willing to have me back in. He did. He said, okay. And then from that point on, I just kind of kept going down the process with this firm. And I was fortunate enough to get through the licensing, get through the onboarding process, and start that practice in 2014. So total fluke. And I'm just fortunate that the guy had me back into his office after.
There's a lot of similarities between your industry and being a realtor.
Yeah.
How did you find it the first few years in the industry?
It's one of my colleagues once said, and very accurately, it's like drinking from a fire hose.
Yeah, I could relate.
I was working as a bartender before.
Yeah.
So I'm sitting there pulling pints for people, and all of a sudden,
good lead generation.
Absolutely. But then think about transitioning that to, hey, I'm going to manage your assets. And I'm driving around in a 1998 Corolla. The gas lines are rusting out. The oil lines are rusting out. I have no money myself. And I'm going around telling people, I'll tell you what to do with your money. So I think from that alone, that was 2 parts. So partly I think that was accurate because I was young, inexperienced, and I didn't have any money myself. The other part was it was a huge mental roadblock for me because I was young, inexperienced, and didn't have any money myself. So think about that constant internal battle.
Yes.
I'm sure a lot of realtors start out, they don't even own a home themselves.
Big time.
Right?
Lots of parallels there.
A ton. So that was insane. So it was, shape up or ship out.
Yeah.
So it was.
Tell me how you got your first client, because realtors were always interested in hearing those stories of how people start in sales.
Yeah.
Because getting that first sale, man, it's the hardest hardest thing.
Yeah.
For me, it took me like 6 months of
Mhm.
being licensed.
Yeah.
How'd you do it? What was your first transaction?
So a little bit easier for sure than being in real estate, because I can close a $600 annual insurance
Yes.
deal or a $50 tax-free savings account, like that, right? And I still remember that first deal. But the process at that time was because, not everyone's going to buy from you. So you had to go through this exercise of listing absolutely everybody you knew.
Yeah.
Name, phone number, address, what do they do? Are they married? Do they have kids? And then you'd review that with your sales manager. And then they'd kind of go through and pick out, okay, these are some ideal opportunities. So out of the 250 people you could list, they kind of looked at all the people who weren't necessarily ideal client profiles for financial services. They said, okay, we're not going to focus there. We're going to focus here. I want you to call these, let's say 150 people. Here's a script, call them all, try and set up an appointment.
And that's how it works.
That was it. So I was in the office with my manager, rehearsing the script, going over it. He coached me a little bit and he said, great, you're good to go. And he threw me in an office with a landline and he said, get to it.
Just get to it.
Start setting up appointments. And I was like, what? And so I started calling people. And that was it. So out of the 125, I would say there were about 30, give or take, who were willing to even give me the time of day.
Yeah.
So I took it from 250 at the top of the list to 30 who were willing to give me the time of day.
Yeah.
And then from that, I was fortunate enough to sign 2 clients, husband and wife. I worked with the husband at the restaurant I was previously at.
Yeah.
They were very keen. We had a great relationship. So they weren't too worried about my experience. They liked what we had to offer. They were already interested, and we had that kind of trust relationship.
Yes.
So we did a couple of deals, small deals, but it was getting from that to that. It kind of downplays how tough it was to get that first deal, but that would have been the first one, and it was just a colleague at the time
And then I'm
in the
sure
restaurant
those
business.
clients probably ended up referring you more clients down the road, and that's how it grows.
That was pretty much it, right? Because I think of the 30 that were willing to meet with me, maybe 6 or 7 ended up buying in that first few months.
There you go.
And you can't start a business with 7 clients. In my industry, it doesn't pay a big commission like a real estate transaction.
Yeah.
You might make $1,000 here or whatever. So if I sell to those 7 clients, I made $7,000.
It's good.
That's it. I'm done. My pipeline is empty.
I love hearing from other industries, how they get started, because a lot of new realtors, they think they've got it so hard. It's a difficult industry, but like every sales industry, there's a lot of parallels there.
For sure.
And for new agents, it's just make a list of people you know.
Yeah.
Send them interesting stuff. We're lucky. We work in an industry where everybody's interested in real estate.
Yeah.
Make a list of homeowners. I always advise new agents, print out what sold on their street recently. Prices are crazy right now, right?
Yeah.
And send it off to the people you know. And then who knows, maybe a few months down the road, they'll be out cutting their lawn, and then their neighbor's going to be like, I'm thinking about selling, And it's a slow start, but like you just got to get out there and speak with people.
That's it.
So your field, the financial, what is the term? It's financial advising?
Yeah, so there's a lot of different names.
Financial
We
planner.
like to call ourselves financial planners. I don't think everyone should be calling themselves financial planners. There's a lot of people out there, maybe they're an investment manager or an insurance salesperson, which is totally fine. We bring everything into one picture. So we'll do the financial planning, the insurance, the investments, the estate planning. We'll advise on real estate, not the buying and selling of, but maybe the timing. So really everything.
Good,
Absolutely. They straight over to my man Marty over at EXP.
And one of my favorite Canadian authors is actually a financial planner, David Chilton, who wrote The Wealthy Barber.
Yeah.
It's such a great book. What are your thoughts on that book?
I love that book, and I love David Chilton. And, I think I told you this story before. I don't know if we were rolling at the time, so I'll tell it again.
Tell it again.
We're fortunate enough to hear him at this big congress for financial planners down in Mississauga. And he's up, rallying the troops, as it were. The firm probably paid him, I don't know how much money to be there. But he's telling this story about how he was at the mall one day, or the grocery store or whatever. And he parks his car in the parking lot, goes in to buy his whatever he's buying, comes back out, and someone had sideswiped his car and totally mangled it.
Yeah.
And the guy just brushed it off. He got in his driver's seat, he drove home, didn't care. Where other people might get frustrated or think, I got to fix this or whatever. And one of his kids then said, Dad, you're so embarrassing. Get your car fixed. He's like, what do I care? I'm going to drive it for 5 more years. I'm the only one who drives it. I can still get in and out of the driver's door, no problem. He didn't care. And I'm like, man, that was awesome. So right away, when he told me that story, he had my attention, because I'm thinking, this is a guy who's not, he's got it dialed in when he's thinking about money.
Oh, seriously.
He's not focused on the little things like a ding on the car, or, trying to keep up with the Joneses or whatever. He doesn't care. He doesn't care what anyone else thinks of him. You see, and granted, everyone in Canada probably knows he's a billionaire. Yeah. So they see him driving in a car, they're not going to judge him, but
Dragon's Den.
Yeah, he doesn't care, right?
No.
So fantastic book, great concept. I challenge him a little bit in the sense that, he'll say it's great general advice, save 10% of your income. What I find in the planning business is that if we just have a goal like save 10% of your income, it's not a sticky goal. It's very easy to walk away from doing something like that, because we're conditioned when we have money from a young age, we get that allowance, we're conditioned to spend it.
Yeah.
So you save 10%, 10%, 10%, all of a sudden you see $25,000 in your account. It's easy to take that, walk down to the car dealership and buy a nice flashy car.
Yeah.
So what we focus on doing a lot is just taking that one step further from investment management or savings to say, let's identify some long-term financial priorities. Do you ever want to stop working? Do you want to have a retirement income of, X dollars a month, 5,000 of today's dollars, indexed to inflation, that'll last you till age 100? Do you want to leave your kids money? Do you want to pay down debt? Let's focus on these bigger picture goals, and then let's build a plan that's going to let you achieve those goals.
Yes.
So if we're focusing on the goals instead of a number like 10%, those are a lot stickier. The client is going to think twice when they go out to make a purchase, because they might know that by making that purchase, that's going to hinder their long-term goal of X that we spend a lot of time identifying together.
The mindset is huge.
For sure.
For me, I could look at my financial journey, and before I was worried what people thought about what I was driving, and what I was wearing, and if I was giving out the energy of being successful. And I could pinpoint a moment where all the tips and tricks that guys like David Chilton, they started to click in my head. And that moment was when I finally got serious about tracking my net worth. For me, that was the moment that everything changed, because knowing what you're actually worth, right? It sort of gamifies the entire thing.
Yeah.
And now, if I know my net worth and I'm looking at an expensive item, maybe $1,000, I'm asking myself, if I buy this, the resale value on this item is like 0 in like 2 months. So my net worth is going down, $1,000. And I applied this thinking yesterday when I was looking at new shoes. You do CrossFit.
Yeah, that's right.
And you guys buy a lot of shoes.
We
right?
do, yeah.
So yesterday I looked at these shoes. They were Vans. They were nice shoes, and I must have like 10 pairs of shoes at home that I also like. I said to myself, if I buy these shoes, they're $89. No big deal. I can afford them. But like my net worth is going down.
Yeah.
$100 right away. So I decided not to buy them.
Yeah.
And that's all because I'm very aware about the net worth. And it doesn't mean that you need to become cheap. It just means that you'll make better decisions. Maybe you don't go buy the brand new car. Maybe you go buy a used car that when you drive it off for the first time, it maintains its value. Maybe you don't buy the super luxurious house. You wait and you buy something that has potential on the upper hand.
Yeah.
So for me, all that stuff really, really changed when I got serious about tracking my net worth.
Yeah.
So do you help clients track their net worth? Is that something that you guys do?
For sure. That's usually page 1 of the financial plan. It's a snapshot of where you are today. Yeah. Very simple. Assets, liabilities.
Have you seen that make a difference for a lot of people?
For sure. I think it's a lot lower than a lot of people think. So they see it and they're just like, whew. Because they think, wow, we got $1 million house and we got, great, what's the mortgage on that house? The bank owns that.
Yeah.
Right? What's the car loan? You got the car, what's the car loan? What's the line of credit?
Credit cards.
Oh my God, credit cards.
Yeah.
Insane, right?
And when I did do that exercise of tracking my net worth, I really got clear and I put my debts And then I did it a step further. I looked at those debts and I said, I put the interest rate next to it, and then how much that was costing me per year. And man, like, you don't realize it when you're not paying attention and you're just paying that monthly, fee on the credit card. But when you look at a 17% on a, let's say a $10,000 credit card, that's like $1,700.
Well, and I'll take it one step further. So the way these things are compounded and calculated, the way the interest rate's calculated on these credit cards, let's say you've got someone with a $30,000 credit card payment, and they're paying $600 a month. That might seem like a lot of money, but if you look at that $14,400 of payments over 2 years, the way these things are structured, $14,400 went to your payments. Let's just say, and without doing any math here, approximately $1,400 went to the principal. $13,000 went to interest. So it's not just the 19% on the balance, and it's not simple math like that.
Yeah.
These cards are meant to just get you into this perpetual spinning your wheels of debt, where even if you're paying a nice big monthly amount, you could be paying, tens of thousands of dollars in interest, and that is going straight to MasterCard, straight to Visa, straight to Amex. You're not even paying this thing down. You might be paying down 10% of your payments might actually be going to the principal. So that's why they take so long to pay down, right?
Is that something you would recommend, that somebody get rid of all their credit card debts?
I do it nonstop. I say, put your shame in the garbage and go ask, the bank of mom and dad for a loan if you're that fortunate to have parents who could help you out. Or let's refinance your house. Let's get a line of credit. We have to get rid of this. Because most people, if they have their income, they have their mortgage, they have their cars, there's not a huge amount of room. I can't just tell somebody, hey, instead of $600 a month on your credit card, pay $3,000 a month on their credit card. They're going to laugh me out of the building, right? How? They don't have the money. There's no cash flow for that. So we have to find a way to get this thing gone, or else it's just going to be a perpetual hamster wheel of debt. So what can we do? And I hate to just say, let's, put that debt elsewhere. We need to tackle the spending, because if you just refinance your house and then rack up another 30 G's of credit card debt, what have I done for you at the end of the day, right? It's useless. So we got to figure out a way to get rid of that.
You can't talk about specifics, obviously, because we can't talk about your clients, but what strategies did you see people put into place that have had success at changing their spending habits? What did they do?
So number one, the first thing I'll get someone to do is we'll say, and this is always a funny exercise, and 10 times out of 10 it goes the same way. So we'll say, what's your monthly cash flow? How much do you need to cover your monthly expenses? And they'll say something like, okay, it's I don't know, $4,000, $5,000, $7,000, whatever the number will be. Let's say they say $7,000, and I say, right on. Let's just get a detailed account of those expenses. And I'll say, what's your mortgage? What's your car payment? What do you put towards your line of credit? What are your student loans? What are your groceries? How much you spend on dining out? Blah, 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 blah. They told me $7,000 is what they need. We add all their expenses up. It comes in about 30% higher than what they told me. And they're looking at this. I say, $10,000?
It's a break-even point.
I say, you're spending more than you make.
Yeah.
And everybody thinks they have this number in their head. We only spend about $7,000 a month. So step one is ask, what's the budget? Step two is we make a detailed account of every single expense for the last month or two. And then they look at that, and that immediately is a wake-up call.
I did a cool exercise last year, and I don't know if it was because of the lockdowns that I was able to do this.
Yeah.
But in April of last year, I called my bank and I asked them to give me a new credit card number.
Okay.
And I also took $200 and I put it in an envelope.
Yeah.
So I told myself I would not use my credit card at all. I would only use the $200 for discretionary expenses.
Okay.
I got emails pretty much every single day of the month.
Yeah.
Your account did not renew. It was like a Netflix. So then I had to make a conscious decision. Okay, well, do I really need this?
Yeah.
Right? And then Crave. And then, we're just talking about streaming services.
Yeah, for sure.
I had an Adobe, because, I do YouTube videos. I had an Adobe account. Like, I didn't need that. Kajabi account. And, like, it's crazy the amount of money that I had on the reoccurring bills on my credit card. And I'm assuming a lot of people are like that. They just spend money without even knowing it.
For sure.
So that was a useful exercise. And then the $200 in that envelope, I would go do groceries and I'd say, okay, well, I gotta not buy steak today. I gotta go buy chicken because it's on special.
Yeah.
And then, I would give the money, and then I'd have like 160 left in my.
Yeah.
I started selling stuff around the house to like refill up the envelope, and it's crazy. Like if you're really conscious about it, like you can save so much money.
For sure.
And it was fun.
It's kind of fun, eh? Like
fun exercise.
We did a similar. When we moved into our first house, it's funny, that reminded me. I needed a lawnmower, so I found one. This guy was selling it for $100, and I was like, oh man. And we had recently kind of did a demo of the basement, and I didn't know what they were worth, but we had these like wooden French doors, and I'm like, I wonder what these are worth. Throw them up on Facebook, buy and sell. I'm like, I wonder if I get $100 for these to pay for my lawnmower.
Yeah.
Did. Boom.
No
Someone
problem.
came, picked them up, gave me $100. I went, took that 100, paid for the lawnmower. Same thing. I could have easily just, gone to the bank, take out $100, go buy the lawnmower.
And throw those doors away.
Throw the doors away. Garbage day comes along. I go put them out at the front. They go to the dump.
Man, that's crazy.
Like,
there's so much money to be made on stuff that you throw away.
For sure.
Anyways, that's a
another topic.
That's a Gary Vee thing. He's the one that he got me. He's big on garage sales. Do you know who Gary Vee is?
Gary Vaynerchuk? Yeah.
So, I mean, he's obviously worth a lot of money.
Yeah.
He still likes to go to garage sales.
Oh, man.
Get a deal.
It's the same as a used car, right? Someone will say, can you afford this $70,000 truck? No. Can you afford $600 a month? Yep.
Mm-hmm.
Or, go buy the same truck 4 years older for half the price.
Yeah.
No one wants to do that. Right?
Makes a lot of sense. So for people that want to get a financial education, what books would you recommend they read?
Well, you mentioned one, The Wealthy Barber, right off the bat, right?
Yeah.
I'm trying to think. To tell you the truth, I haven't listened to a ton or read a ton of financial planning books. There was another really good one specific to, so this might be a bit self-serving, but it was titled Simple Wealth, Inevitable Wealth. Okay. And that was by a gentleman named Nick Murray. Okay. And he basically outlined how you can work with your financial planner to build easy wealth, sustainable wealth, generational wealth.
Simple wealth?
Simple wealth, inevitable wealth.
Inevitable.
And he just talks about working with a financial planner and, these are the things you should be doing. And just kind of, he's really good at kind of explaining how you can just kind of push all the noise that's out in the marketplace and just really focus on your goal.
Yeah.
Right? So I think that's a fantastic place to start. That gives people a really good idea on what it could be like working with a financial planner. There's a ton of information out there, right?
What YouTubers would you recommend people follow, or podcasts, or anything in that realm?
So I like, and maybe it's I don't know, it could be, this is a little bit, I guess, against what I do. Not against what I do, I shouldn't say, but I'm a big proponent of, instead of just listening to something about financial planning or something about investments specifically, I'm a big proponent of listening to more of the self-improvement type audiobooks. Yeah. So a lot of my clients, the books I even refer to them to listen to they're not, hey, read this book about this investment or whatever the case may be. I'll refer them to different types of books. Really good one would be Atomic Habits. I'm not sure if you've read that one. So this is a fantastic book, and it's more, and I guess I'm trying to think about the question, and I think the reason I'm not a huge fan of financial planning books is because they may be tailored a little bit more to people who already have that belief system. Gotcha. That, I need a financial plan, I need to invest regularly, I have an idea of my goals, so then they can get into the actual logistics of it. For most people, I think where the big challenge is in a behavior shift. Okay. So if people are just interested in building wealth or having a better lifestyle or having less stress, because really at the end of the day, money is not the end goal. No. The dollar amount is not the end goal. It's about having a good life, being able to do the things you want to do, having the time you want to have. So I think most of the books I'll focus on are more about behavior change, right? Atomic Habits is a great one. I listen to a lot of Grant Cardone's books. He talks a lot about investing in yourself, right? And not, worrying about competing with other people.
It's so true what you're saying, because if I were to pinpoint one book that made the biggest difference in my financial journey, it's not even a financial book. Yeah. It's The 4 Hour Work Week by Tim Ferriss. Because, he's all about time management. If I were to put that book into a classification, it would be time management.
Yeah.
But, he talks about there in that book that, the easiest way to have better time management is not to need to spend so much more, and that's the one that made a big difference for me.
Yeah.
So have you read that book?
No, I'm on his blog. I haven't actually read his book, but I do listen to his blog. It's fantastic.
Yeah, he's great.
So I think that's interesting. I think, a little self-realization there for sure. I think it's more in the behavior shift. I'm reading right now, Extreme Ownership. And it's about this guy, he's like an ex-Navy SEAL, and he does a lot of business coaching now.
Jocko.
That's right.
Yeah, I read his second book, Tactics of a Leadership.
Unbelievable. So that's a leadership book, but his whole concept is taking absolute ownership for everything in your life. So instead of saying, the markets are in the toilet or I don't get paid enough, it's about saying, his whole thing every single time he does one of his business seminars is whose fault is that?
Yeah.
And they'll go off, oh, it's this person's fault, it's that fault. But then at the end of the day, it's like if we can take responsibility for, our own actions, and that can be pretty.
I can share about, one of my situations 2 years ago. I was hundreds of thousands of dollars in debt, and we talk about it a lot on this channel. And, I'm not sure it's Jocko that put this thought in my head, but I looked at that and I said, that is my fee for my financial education. Some people come out of school with hundreds of thousands of dollars of debt in student loans. Well, that's not a student loan. That's me being silly and, not caring about my money.
Yeah.
This is a hole, and like Jocko would say, good. You need to get out of it. And then I looked at that as, my fee for, getting a financial education.
Yeah.
And it was a huge motivation to, just get out of that hole and, learning the habits that I needed to in order to get out of that hole have definitely kept on going. And now they're serving their purpose of keeping me on that track.
Yeah.
So even if you're in a bad situation, just say, try to find a good way to look at it.
For sure.
And say, good, this is going to be motivation. Sir, you just lost.
I love that. That's awesome.
Yeah, so that's the way I looked at it. So let's talk about this very hot stock market. Does it scare you at all? What's going on right now?
I mean, I guess there's always going to be risk when we're investing, right? And it's interesting. Risk, I guess, and not to get too boring here, but it's all based on this modern portfolio theory. And risk is just measured in volatility. Mm-hmm. So how much a security or a mutual fund or an index fund or a Bitcoin or a crypto or a piece of real estate, how much does that move up and down? Mm-hmm. What's that, I guess, deviation? So that's where we measure risk. So it's all just relative to each individual situation, right? So we can look at the past 10 years where we had this crazy bull market and anyone throwing darts at a board could have made money. It's a little bit different now. So I think even if anyone's been following the stock market recently, they've seen a lot more choppiness. Yeah. There are a lot of companies and some of the big index funds that I'd want to own and some of them that I wouldn't want to own. So
it's case by case.
Exactly. It's always case by case, right? So we always work with the portfolio managers, our trusted portfolio managers who are some of the smartest minds out of Yale, Harvard, MIT to actually pick the companies we want to be investing in. Yeah. And then we're just matching that to the client's risk profile. So if I've got a client and they've got 4 years to retirement and we've done a good job planning, I'm not going to put them in the same type of investment as somebody who's 30 years old, they've already bought their home, they've got stable income.
It's always case by case.
Yeah, it's always case by case. In terms of the market in general, I'd say if you want to believe that the market's crashing, you're going to go on Google and you're going to find plenty of information that's going to tell you that the market's crashing. If you want to believe that the market's strong, you're going to go on the internet and find plenty of information that's going to tell you that the market's strong.
Confirmation bias.
Absolutely. I think at the end of the day, right, Warren Buffett doesn't know in the short term whether this thing's going up, down, or sideways.
So what's his strategy?
His strategy is to buy and hold.
Okay.
So that's it, right? If we can avoid the emotional investing of the stocks are up, the stocks are down, the stocks are up, the stocks are down, We don't want to be paying too much attention to these short-term fluctuations, even if there is a big, let's call it a market correction or a market crash, like at 2008. And it takes 4 years to recover from that high to where we were before the housing market crash in the States.
So people that sold in December 2008, they lost tons of money.
Yeah, they crystallized their loss, right?
Crystallized their loss.
That's it. That's what they've done. So they've said, okay, I want to lose this money. I'm going to sell my investments, even though I don't necessarily need them right now. I think that's the big difference. And I think that's why there's much more scrutiny on the stock market, because we know what the price is every single day in real time. The markets here are very efficient. Real estate, it's measured much differently. You don't have a flashing light above your house every single day that says, this is the price of your house today. This is the price of your house today. This is the price of your house today.
That's so true.
Right? So we don't do it with our homes. I'm not worried if I bought a house for $750,000, and I don't think the real estate market's going to crash. I could be wrong, but I don't care if tomorrow the value of the house is $450,000 because I'm not selling it tomorrow. I might sell it in 20 years. Mm-hmm. And I'm pretty confident that in 20 years, it'll be worth more than it is today.
Yeah.
It's the exact same as the stock market, right? The only difference with the stock market is there's so much scrutiny on it. We see the price of these securities every single day. There's so much news on it. We turn on the Squawk Box. You got Kramer running his mouth. Box? It's just this show where they just basically talk about global financial markets. And it's called Squawk Box. And it's just a bunch of people yelling at each other about what's going on in the market.
It's just entertainment.
Right? So, I mean, is the market hot right now? Is it at an all-time high? Sure. Was it at an all-time high in 1999? Yeah. Was it at all-time highs before that? Inherently, the market is always going to hit new highs. Mm-hmm. There's no ceiling on the market. What we do by investing in the stock market is we invest in the future cash flow of really good companies. And so if I'm investing, let's say, in an Amazon or a Tesla or whatever, some kind of green energy company, I'm not really investing in that company's value today. That stock price is based on their future cash flow. What kind of projects do they have going on right now? So we're able to kind of look at this and say, we're not really worried about what's going on today necessarily. We're worried about investing in companies that are investing in really good projects in the future. Yeah. And if we believe in those projects and we believe in these companies to generate future profit for their shareholders, and
it's case by case.
It's all case by case,
and I'm
right?
Sure
so
if you're talking to an investor that's 25 years old versus 65 years old, the conversation would obviously be different, right?
Yeah, absolutely.
Each person.
For each person, for sure.
I wanted to talk about this topic. What is inflation, and should we be worried about it?
So we'll start with what is inflation.
Because I've been hearing a lot about this on the news.
Yeah. Yeah, so it's a great question, and basically this is the cornerstone of my business. If there was no inflation, I probably wouldn't have a business, because people could just take their cash and go bury it under the apple tree, like my lovely wife Nona did back in the day, right? So, but the reality is that over time, most goods get more expensive. So this is inflation in a nutshell. A house or a loaf of bread or a bag of apples cost
2x4.
Yeah, 2x4.
Construction material.
Exactly. These things cost a lot less in 1970 and 1980 than they do today. So the way inflation is measured is by something called the Consumer Price Index. Okay. So the government will take a basket of goods that a family, the average family buys on a day-to-day basis or a year-to-year basis, and they'll say, okay, what is the cost of that basket of goods today? Okay. And then over the next year, they'll say, okay, what is the cost of that basket of goods today? And if there's an increase in that cost, then we've had inflation in that year. Okay. So what you've probably seen being in real estate, and why there's so much talk of inflation right now, is let's say that you had a project on the go where you were a developer and you bought a piece of land and you said, okay, we're gonna buy this land, and then in 6 months we're gonna have it all zoned and we're gonna start buying our materials. They had a price in mind of what those materials were gonna cost. 6 months down the road,
it's different.
They now have to charge a much different price for those units than they were going to have to charge before, because their cost just went up 150, 200%, right? So we look at that, and really that kind of the cost of materials, the cost of labor, everything has a trickle down effect to the end product, right? So that house, that end product, is going to cost much more now than the developers initially thought it was going to cost.
Yes.
So then that's going to be passed on to the consumer. Is it something to worry about? I would say generally no. In terms of the stock market, inflation is historically good for the stock market. And it's just a reality. You know, we've had very low inflation for the past, so I think it's inevitable that the price of goods is going to start rising.
It will happen. I mean, especially with the way that the Americans have been printing money, right?
Yeah.
It's going to happen. But that's one of the reasons why you want to be invested
For
in
sure.
something.
Yeah, in these projects, right?
Yeah. Because
You as an investor, you know, do you want to invest with a company where they're doing a real estate development and the price of those houses are going to be higher in the future than they are today?
yes,
Well, of course, that's the whole point, right?
let's change it for future gain.
Exactly. So you're going to keep up your purchasing power.
Yeah, it's a fascinating topic, and I'm sure we could talk a lot more about it.
Mhm.
But it's something that I like to think about, and it's a reason that I did this next move, and I'm just curious what you think about it. I just bought some real gold.
Oh, yeah, okay.
So I bought an ounce of gold,
Okay.
and right now it's trading at 2,200.
Yeah.
And what are your thoughts on precious metals?
Yeah.
Have you given it any thought?
So professional thoughts, I don't really have a ton. Personal
Yeah.
thoughts, I think gold is a big zero burger. I think,
Okay.
you know, and I'll quote Kevin O'Leary on that. I think Bitcoin is a big zero burger.
So what does zero burger mean? Like
It doesn't
no
do
gain?
anything. So, and not in terms of, so and maybe it's just because I listen to these guys way too much,
Yeah.
you know, Kevin O'Leary and Warren Buffett, and then that's that whole term,
That's
zero burger.
Because
So-
I respect those guys, like Kevin O'Leary. I always like
Right.
but I follow guys that are very is bullish the term?
maybe
They're like-
contrarian.
They're optimistic about gold.
Right, yeah, okay.
Yeah. So like you said earlier in our podcast, you know, you can find whatever confirmation you're looking for.
Absolutely. There's going to be, you know, a bunch of people who watch this video and think this guy's an idiot. He doesn't know. Like, sure, everyone's entitled to their own opinion. That's the beauty of this, right? Like, you could invest in gold and I could invest in something else and we could both have a similar outcome at the end of the day. Or I could be totally wrong, but I always thought so, and I'll take this back to investing in companies and projects. And this is, Warren Buffett said this. If you buy a stock of a company, you are investing in their future projects and their future cash flow. Okay? If you buy a brick of gold and you put that gold in the safe, and 20 years later you go and you open up that safe, what do you have?
Gold.
A brick of gold. It didn't do anything,
Didn't move.
right? So you're buying these things based purely, and this is again my personal opinion, and maybe listening to too much of the guys that I
No,
listen
it's
to, but you're buying these asset classes based solely on the speculation that the demand is going to increase and drive up the price. It doesn't do anything. A piece of gold doesn't do anything.
Yeah.
We're just assuming that more people are going to want this thing that has a finite supply. Same thing with Bitcoin, right? That's the whole thing around it. There's only going to be so many mined. So the people who are buying Bitcoin are assuming that more people are going to want Bitcoin. And the more people that want it, and it's a finite amount that's produced, same as gold, you know, they have an estimate for how much gold is on Earth. And they know exactly how many Bitcoins will be mined or whatever.
I want to talk about Bitcoin.
So they're just assuming that more people are going to want this. And I don't know, maybe they're right. I have no idea. Again, I have no idea if Bitcoin's going to take over as this like global currency. Right now, I know it's not. I know I can't, you know, take my Bitcoins and go buy something like in Japan or what. It's very illiquid. It's tough to move it around. It's tough to kind of transfer it between cash and Bitcoin or whatever. So it's not that yet. Does it have the potential? Maybe. I don't know. I don't think anyone really knows right now. I think there's the potential there, but will it happen? And the people who are buying it,
They're quite pricey.
they're banking on the fact that it will. They're saying that this is going to be the thing and everybody's going to want it. And that will make the price drive up. And then I will have it and I will have bought it when not as many people thought that. Same as gold, right? Now there's a certain amount of people who think gold's worth this. More people will want it in the future. That will increase the value.
Now we're total in speculation land, and this has nothing to do. It's just two dudes talking.
Good. I'm gonna get myself sued.
No, I don't want. We're just. Can we do that? Can we just,
Yeah, absolutely. This is just two guys talking.
Could we see a government backing a blockchain? Is that something that might happen down the road?
Yeah, I mean, you could see governments backing Bitcoin. There was all this news back a couple of months ago about these institutional investors buying up Bitcoin, right?
Like
Elon Musk, so he's not so much of an institution, but like
Yes.
big banks or big pension funds or something like that, right? They're buying it. Could we see it? Absolutely. I mean, I think, but inherently, it's not, like the whole draw to Bitcoin is it's not backed by a central government and it's not backed by a central bank, right? So could it get the endorsement? I think it's a bit different. It may be the endorsement of them saying, yeah, you know.
Because a normal currency, fiat,
right?
That is powerful because it's backed by a government.
That's right.
So I'm just wondering, you know, why would a government go and back something that's already worth $60,000, $70,000, $80,000 per unit?
Right.
Why wouldn't they just start their own?
Absolutely. That's like, it's. I guess at the end of the day, the 60,000 is an arbitrary number. So exactly. You know what I mean? Like, so I guess anything's possible, really. Like, nothing is out of the realm. Like that's always what I'll say. I'm never. I'll always just work with the information I have today. And I don't know. There's so much uncertainty about that, and it's so volatile. And
that's good advice, man.
I think it's just kind of and you know, the whole thing with Bitcoin is the thing that I don't understand is it's, you know, they're not really. It's not a security, so it's not doing anything. It's not building anything. But the idea, as I understand it, is that it's supposed to be a central currency or a value of currency.
We just don't know.
The only thing I don't understand is how could something that's so volatile be a value of currency? You know, I want to buy this Perrier with a Bitcoin. Today I need 60,000 Bitcoins. Tomorrow I need 4 Bitcoins. Like 0.01 Bitcoins or whatever, you know? Who knows? I don't know.
It's too volatile.
It's crazy volatile. So I've
heard about a guy that's got some Bitcoins in an account, but he forgot his password.
Come on.
Yeah, he's got something like $12 million worth, and apparently you can only try the password like 9 times.
And then you're just done.
He's tried it like 7 times. So now he's got like 2 tries left, and he's just got that money sitting there, and that wouldn't happen with conventional money. Right?
You'd hope not, yeah. That's like that game Deal or No Deal. Pick this suitcase.
Oh, jeez. Yeah, that must be poor guy.
I guess it could you imagine, like,
stress.
That'd be me too. I've got like this list of passwords.
There's no like framework just doesn't exist around it yet, like a bank. You know?
Right.
If you needed the money in your bank account, you could go talk with a person. Face to face.
I guess there's some other ways. There's a new Bitcoin ETF you can buy.
Okay.
So that's interesting because you could open a TFSA or an RRSP or a non-registered account. You can buy this ETF.
Yeah.
And it's much more easy to convert that to cash. You don't have to have a digital wallet. So there are other ways of buying it too, right?
That's interesting.
So that's probably the route I'd go because I'd be the guy who would lose my Bitcoin password.
Yeah, that would be awesome. I know you got to run, so we're gonna wrap this up. But you know, if you're talking with a young realtor, or maybe not a young realtor, but somebody who's transitioning into the real estate industry, you know, what financial decisions should they make right from the get-go in their new career as an agent?
Yeah, that's a great question. I'd say we'll use real estate specifically because I love real estate. I think it's a fantastic career, and I think there's some phenomenal real estate agents. And if I could help them out in any way, that'd be great because we do work with a ton of real estate agents. I would say first off, you want a bit of an emergency fund, let's call it. So if you could have, and this isn't just for real estate agents, right? I think every client, like most of my clients, I recommend let's have an emergency fund. Let's get, 3 to 6 months of your monthly expenses in cash in your savings account. So, as a real estate agent, I'm sure you could get lucky and get a quick close, but what's the average? Maybe 6 months until you get your first deal?
I mean, if you're working with a buyer, it might find him a house in like 4 to 6 weeks.
Yep.
And then it might be 60 to 90 days before closing.
Yeah.
And then a few more weeks for the brokerage to process the transaction.
Yeah.
So having an emergency fund for 3 to 6 months, 6 would be.
So I'd say conservatively, let's go 6.
Yeah.
Right. That's a big one. So that'd be number 1 because you do not.
And by the way, I think this is excellent advice for somebody who's starting out.
Yeah.
But if you've been in the industry for a few years and you still don't have that 6 months saved up, you will be a much better salesperson when you are financially stable at home.
For sure.
Because there's a thing called commission breath. And, the agents that are...
I had that in 2014 for sure.
Yeah, when you're starting out, right? But once you're secure in your own financial journey and, you know where you're going, when you're speaking with clients, they could feel it, right? Marty doesn't really care, you know, if he makes the commission at the end of the. I always like to make a commission, obviously.
Of course.
But you know, it's not something. I'm not there to push you to sell your house because I need to make a commission.
Yeah.
I'm there to help you make the best decision. And if you end up selling your house 2 years down the road, hey, I'm happy with that.
Yeah.
You know, because I'm giving you good service,
Mm-hmm.
we'll probably end up working together in 2 years, right?
For sure.
So getting that 6 months of you know, emergency fund.
Yeah.
I think that's good advice for everybody in
Yeah.
real estate.
Absolutely. That'd be number one for sure. You know, second, maybe not financially, but I think it has that trickle down effect to your long-term finances and your long-term success in the business, would be to just be 100% honest with everybody you're dealing with. I think, because I know in my business, I've seen a lot of people try and skirt around how long they've been in the industry, or, you know, what designations they've had, or how many houses they've helped a client sell or buy, or what was their biggest ticket sale. You know, I think that's always going to come back to bite you. You don't want to be kind of going around making up all these stories, because it's going to come out at the end of the day, right? And you're going to have to keep track of all these lies you've been telling to all these different people. And that's no way to run a business. And like you said, if you're honest with somebody, you do a really good job, you just try and be as helpful as possible to as many people as you possibly can, you're going to get the deal. And then that's going to result in more referrals or repeat business.
I always tell my coaching clients, like, if you're new in the industry, be open about it. It's like a superpower, because people are like, wow, you know,
Yeah.
I'm helping out this person. It's their, you know, first 10 transactions or whatever.
Absolutely.
And new people, they've got an energy about them. You know, they haven't been conformed to the industry yet.
Yeah,
And
yeah.
I love watching them go, because sometimes they think about doing things a different way.
Yeah,
Like, man, like, if you would have been in the business for 10 years, you would have never thought about that.
for sure.
Right? So I think being new is somewhat of a superpower.
It could be a competitive advantage, right? Like, think about that. You have the ability, you know, it's maybe not somebody like an experienced agent who's consistently dealing with 150 clients.
Mm-hmm.
You can treat every single one of your clients like a Platinum Plus client,
Yes.
right? And I think inherently, Canadians especially, we want to help people out,
Of course.
right? So we want to help people out. So how cool is that if you know you got this, you know, gung-ho realtor who's doing the best they can and working their ass off for you, and you know that you're going to help them do their first transaction.
For sure.
I think a lot of people would be excited about that. I don't think it'd be a detriment. You know what I mean? I don't think people would look down on that. And if they are, do you want to work with that client anyways?
Exactly.
Get out of here.
And I mean, getting a conversation with a financial advisor, I think that would be key.
Yeah.
I mean,
If we can go self-serving for point number 3, absolutely. I think if you can start developing a plan from day one, and this is really where I'll work, and I work primarily with, you know, a lot of real estate agents, as you know, a lot of business owners, and we work with a plan not just to increase their savings or, you know, get the right insurance policy in place, but where I have my most fun is working with these clients to help them increase their income, increase their revenue. How can we get more money? Because my job becomes a lot easier if I'm working with a real estate agent who's like, I just want to make 50 grand a year and that's enough. Mm-hmm. They're not going to do much with me, right?
Yeah.
But if I can start working with a business owner or a real estate agent who wants to build something, build their own team, they have, you know, income goal of 50 for their first year, but they want to do 250 in their second year and 500 in their third year. A lot of what I do as a financial planner is work with these business owners to even help them with their business plans.
yeah.
Because that's a win-win situation, right? If I can help somebody make more money for themselves, that's in turn going to help my job building their financial plan if we have more assets to work with.
And it loops right back
It's going to loop right back, right?
to being stable
Exactly.
and
So
be a better salesperson.
for sure, get rid of that commission breath.
I like that.
Get your money right. I mean, you get your money right, you're not worried about, like, there's so much that people don't think about. They don't think about the emergency fund. They don't think about what were to happen if they were to get sick or get injured and not able to go out and work 40, 50, 60 hours a week, right? That's what's driving that income. They don't think about where they want to be in 20, 30, 40 years. Like, do you want to be running around doing 50, 60, 70 transactions every year?
Whew.
Let's figure out a way to get that money working for you while you sleep, right? And real estate's amazing, but if you just want to keep buying and selling, man, that is a grind into your 50s and 60s and 70s, right? Let's get that money, let's get you making money while you're sleeping.
If you start young, it's even better.
Absolutely.
Good.
Yeah, that's a huge one for sure.
How can people get a hold of you?
That's a great question. So, you have my contact info, but we'll go, if we could do a little box, but phone number 613-325-6709. And that's the cell, that's the business line. Shoot me a text, give me a call. And
you got a website? I'll put it in the
so I got a website. Just for compliance reasons, I won't. We won't add that. But honestly, I think so much of the fun I have is just talking to people. And really, for me, it's if there's anyone out there who does want to work with me, it's really not about getting a client for me. It's about starting that relationship. If I can have a conversation, if I can help you out with something totally unrelated, if I can go help you, negotiate your interest rate on a car loan, I don't care. I want to be as helpful as possible to people. And what I find is if you just got a question, there's no stupid questions, or you have something specific to your financial situation.
You love talking numbers.
I love to talk numbers. I'd love to have a call and just see if I can be of any help in any way.
I got tons of knowledge today.
Nice.
Thanks, man.
Oh, thank you. This was awesome. It was really exciting.
Good stuff. Hopefully we'll have you back soon.
For sure, man. I appreciate it.
Right on.
Nice.
Thanks, everybody, for tuning in. If you have any questions for Chris, like we mentioned earlier, we'll put a description down below. And, if I can just give you a piece of advice is, if you're new in the industry, just get your money right. It's going to make a huge difference in your level of confidence, and the clients will really feel it, and in return you'll be able to sell more properties and you'll just be less stressed. You'll be more comfortable with yourself. All right, so until next time, and we'll see you guys next week. Ciao.